Let's welcome in the management at REC now. It's been one of the big buzzing stocks in the last few months or so, is almost trading at a 52-week high. It's around the 160 level and the Q3 numbers were declared recently. The management is now joining us. Sir, thank you so much for taking out time for us. Could you just first tell us that in the last 12 months, how has the power industry changed, especially after Uday? Do you see a lot of changes into a lot of, largely a lot of way these companies were operating earlier?
Good morning. Thanks for having me here. And let me say this categorically that these are very exciting times for the power sector. The power sector is going through a major transformation which this country has never seen. And first and foremost, the recognition that the power, investment in power is the biggest driver for growth and it has a catalytic effect on the entire growth momentum. And so the government has a very clear policy of providing 24/7 quality for all by 2022, which is a 5-year action plan, and to add the green energy to the tune of 175 gigawatts over this period of time, modernize the entire transmission grid, and kickstart a major transformation in terms of the efficiency in the management of the power utilities, distribution of power to every household, every village. So what the power sector is going through a major transformation, which is reflected in the performance of organization like ours, which is at the center of this power sector financing as well as the power sector development. And especially with reference to what you mentioned about Uday, there are 2-3 major initiatives of government for which we are the nodal agency. One is the Deen Dayal Upadhyaya Gram Jyoti Yojana, which seeks to provide power, electricity to every single village. There were 18,452 villages that remained unelectrified at the beginning of the last financial year. So far, 12,500 have been done, and we hope to complete the rest in the next 6 months. There are household electrification, which is progressing at a very fast pace. But most significant of these is the Ujjwal Discom Assurance Yojana, the Uday. It's a recognition that the distribution companies need a major overhaul, modernization in terms of the financial management, technology upgradation, and governance reform. And this has been one of the major initiatives ever taken by the government, and of which the major restructuring has been done. This is the first time all the major stakeholders, that is the central government, state government, and all the power utilities have come on board together to commit themselves to certain efficiency parameters, both in terms of financial management and delivery of services to the clients, and also overall improvement in the power sector. So this is contributing and is likely to contribute to changes in terms of costs, efficiency, and the reach that we have never seen before.
Right. Two more developments after the Q3 numbers was that you are expecting prepayments of around 13,000 crores or more from a couple of states, and as well as earlier there was some indication that REC may be buying Discom bonds or state bonds, but now that's not happening, right?
Okay, let me clarify this. The Uday principle was that since the distribution companies are debt burdened and the debt is constraining them for further modernization, further investment in the capex needs, the 75% of the debt was to be taken over by the state governments, so swapping essentially a high cost longer term debt with a medium-term, low-cost debt by the government, so that there's a greater operational space for the discoms in terms of their financial management, which will enable them to make greater investments in technology modernization and improve the overall efficiency, and committing themselves to certain operational parameters. Now, REC had an exposure of about 78,000 crores overall, but there were quite a few states which felt that there was no need really for prepayment. So the prepayment was to be made to the tune of about 62,000 crores to us. and of which we've so far received about 35,000 crores. We are expecting another 12,000 crores to come back. But let me say this. Now, this is essentially a prepayment without penalty, in a way to help the distribution companies not to be burdened with the penal interest. What it translates as far as REC is concerned, it has not affected our performance because we stepped up our disbursements. We were expecting a disbursement of our target for 45,000 crores this year. We are likely to end up with something like 56,000 crores. We have stepped down actually our borrowings this year proportionately to manage our loan book. Our loan book, which should have grown about 15%, to about 2,35,000 crores, has remained broadly around 2,02,000 crores. So it is not overall affected in any way, but let me also say this, that we are in essentially lending business. We are not in the investing business. So we have not subscribed to DISCOM bonds. There's a general perception. So the DISCOM bonds are essentially the government bonds into which various institutional investors and have invested, but REC has not invested into the DISCOM bonds.
Right. So,
I hope
growth
I
was
make
slowing
myself
down
clear as far as Uday is concerned, but growth has not slowed down. In fact, growth has picked up momentum. We've been growing. The growth has picked up momentum. In a way, our sanctions, if you see the current year sanctions, are almost about 75,000 crores. We expect this to be almost touching 80,000 crores plus. And our disbursements, which our target is of 45,000, we may exceed about 55,000. So the growth momentum has not slowed down, and I'm very confident, given the level of investments that are being made in the power sector, which is almost about 1,50,000 crores a year is the requirement in the entire value chain. And where we are active in the entire value chain, whether it is generation, transmission, distribution, modernization of the old, the replacement of the old thermal stations, and above all, more importantly, the renewables. Now, in all these verticals, there's been a quick growth momentum, and we hope to exceed 15% growth in the next year. In fact, our expectation is in the next 3 to 4 years, our business must double. So the growth momentum is actually picked up, and it will continue to grow much faster given the demands for investment, especially at the transmission and the distribution network. The entire distribution networks are being modernized. There's a big investment that's being made in feeder separation, smart metering, smart substations, and above all, the energy efficiency devices. So if you look at the whole ecosystem of the power sector transformation, we are positioned at the center of it in terms of financing, promoting, and supporting. We have 2 subsidiaries which are actively involved in providing project management support, and we have a JV which is involved with the energy saving device application. So it's quite a robust ecosystem that we are witnessing.
Right. In terms of growth, do you see renewable energy as now being one of the biggest growth area for the companies?
Absolutely. Absolutely. We are already involved actively in this sector, and then we intend to aggressively participate in financing, leading the entire financing of the growth of this renewable sector, and with the ambitions of the government to ensure at least 175 gigawatt additional green energy to the country, of which 100 gigawatts is expected to come from solar. We are very active, and we will continue to be very active. And more importantly is the evacuation infrastructure, the creation of the green corridor for this country, which is the main determinant of the government. We are already involved in that, and then we'll continue to be aggressively participating in creating this evacuation infrastructure and integration with the overall grid.
At the end of Q1 FY17, NPAs had actually inched up to about 4,800 odd crores. But now do you see signs of stabilizing as growth is coming in from renewable energy, some prepayments are coming in? Do you believe that NPAs have stabilized, or at least the worst is behind?
You see, actually, among the peers, we have the lowest non-performing assets. I mean, our gross is about 2.32, and if you see the net, it is as low as 1.6. Our NPAs are actually have declined compared to the last financial of the same period. We have no NPAs at all in the government undertakings in the public sector arena, and whatever remains is in the private sector. We are working quite actively. We have a very clear action plan which we are working with our partners. In most of them, we are one of the co-lenders. We are not the sole lenders. We are lead in many of these cases. We are working together with the other partners to see that we salvage these assets. And so I foresee that, I foresee that we will, NPS have stabilized, and we will ensure that no further accretion takes place. Even our restructured loan assets are declining, and they are likely to sharply decline. So we are not likely to exceed this 2% mark. And as our loan book grows, as our disbursements expand, as a proportion of the overall loan book, our NPS are likely to come down. So as far as REC is concerned, we have the least of the exposure, and what we have, we are managing fairly well. And I'm confident that in the coming years, that those issues in the next 6 months, you will see a remarkable difference as far as the NPS are concerned.
Right. Also, if you could just tell us that, for NBFCs, the key thing was that rates in the system were coming down, cost of funding was reducing, and that led to margins being higher. But for you, it's slightly different because you also have the ECB route. So going till June 2018, your cost of funding would still further decline?
Yes, I mean, in the sense, we are exploring all markets, both the domestic and the external markets. I mean, wherever, I mean, our main objective as a public sector NBFC that is publicly traded, and where 41% of our stock is held by the individuals and the institutions, of which 20% is by the foreign investors. We have a responsibility to our shareholders to ensure we remain profitable, we borrow cheap, we lend at a fairly competitive rate. So we have a dual responsibility to remain profitable, and at the same time to provide investments to the power sector growth at a very competitive rate. And we are managing that. We are managing that essentially by being strategic in terms of our borrowing strategies, both in the domestic market and the external borrowings. As you are aware that we've just mobilized $230 million syndicated loan from the overseas market. We are likely to increase that. We have an ECB approval of $1 billion from RBI. We will continue to pursue that route, and particularly in the green bond market, which is still remains untapped. That's really robust in Europe and some other parts of the world. And considering that we are a major player in the renewable sector, we intend to tap into that. We are also doing a lot of work in terms of extending power to the villages which hitherto were living in the dark, including those households that have never had access. And just imagine the impact it has on the families, on the societies, on the economy. And so there's a huge socio-economic impact. So we also plan to tap into the social impact bond market, which is niche market, small market, that has not hitherto been tapped into. And this will further should lower our cost of borrowings.
Right. Sir, thank you so much for taking out time for us. Always good to have a perspective from you. That was the management of REC, very confident that loan growth would pick up and NPAs would tend to come down. It's been one of the big buzzing stocks in the last 6 months.